Today, you're going to learn the only indicator that you need to trade Nvidia. And no, it doesn't have anything to do with MACD, RSI, stochastics, Bollinger Bands, any of that stuff. I've been building trading strategies since 1997, and we're not using much of any of that stuff now. Now that we have built machine learning to find all these cool rules and things to beat the markets. This is a completely proven strategy. The backtest has showed 58% average annual return, so you might want to listen up. And what does it have to do with? Well, there are these special no-go zones that you absolutely cannot be trading Nvidia. And I'll show you exactly what I mean in just a second. And let's put a pin in that too, because I'm also going to cover an advanced topic and show you how to even have more gains, like 70% average annual return in some of these strategies using the weirdest stuff. But I figure we need to crawl before we sprint. And so, and again, it's 2025. Why people are not using completely tested trading models is beyond me. Anyone can draw a line on a chart and scribble all these different patterns. And what you'll find is, well, I spent a whole lot of money accidentally disproving it, a chart pattern and so forth. That is pareidolia. The human mind sees a lot of shapes and faces and weird stuff in randomness. That's just how we are. We're pattern recognition machines. So if you want to make serious money, listen up, because I've been doing this my whole life. So it's time to stop winging it and use trading models where you can have a very clear, no weasel room, buy and sell signals. So I love using templates. So let's take a look here in this 2024 template. It was great. And what it's going to do, I had to go ahead and replace the symbol with Nvidia. And then I made sure all these rules were all blank. And there is one rule right now that built this strategy is, like I said, I'm going to fully reveal it, but it found it itself. And I just went in here for random selection of indicators. And what kind of indicators are we using? A lot of traditional ones and some that are pretty unique to Portfolio Boss. So you can see there's Bollinger Bands and correlations, things like that in there. And it's just going to try all these things and go over several generations and test and see what actually works. So that way you don't have to program. There's no programming whatsoever with Portfolio Boss. And I just kept everything just pretty basic. Made sure that 80% of the data was what we used to train the model on, and then we keep 20% hidden. And then we even use an additional 6 months that's it's sort of like a double blind where we set the strategy effectively aside for 6 months to see how it performs. So that is how you keep from overfitting to the past, because last I checked, you can't go to the bank and cash a back test. You need to make sure your model actually works in the real world. So robustness is the key right there. And then all I did after that is this hit start a few times, and the boss, which is 3,500 CPUs in the cloud, they roared to life and built these trading models from scratch. No coding required. So let's take a look at what happened in those 4 generations. We could see this, what you need to see is this orange and brown line. They're close together. That means the strategy is doing very well in data that it hasn't seen, so it's generalizing. Now, if you see something like this, it sucks, right? The orange line and the brown line are miles apart. That means it's not generalizing, it's overfitting to the past. So let's take a look though. And so this test looks decent. This one too. And this one are the brown and orange lines together. Yep. And then finally, this one over here is the one that I liked. And I picked the strategy that was in there. So all 4 tests showed a lot of promise. And then we'll go ahead and fully reveal the rule now. And it's basically looking at the high and low over the last, it's about 3 months, 21 trading days per month. So it's close to 3 months. And then it's got this weird band in here. So it's going to be better if I visualize this on the chart for you. And you're going to get it. You are going to get this. So we have over here, this is the high over the past 58 trading days. I'll add one more. Let's get the low in there as well. There we go. So we'll have just 4 little lines. I think we can do that. Now, most people think that, okay, I'm going to put this stop loss in at a 3-month low. Well, guess what? This strategy loves the fact that you put your stop loss and that you actually even use stop losses, because that's how it makes money. So you can go ahead and look at what the average person is doing and then do the opposite. And so I have empirical proof. You can't really deny that a strategy like this is making tons of money off of people's naivety. So we do the opposite of most people. So let's go through an example. So these two bands right here, we got this band right here, this bad boy right here. This is a no-go zone. So all in here, these are the no-go zone. You would never do any of your buying in the no-go zone. You want to go ahead and be buying the dip, right? That's where people put their stop loss, or your trend following. Like recently, you could see that once price got out of that no-go zone, it bought the next day at the open and has been trend following ever since, and has that's a nice little profit there, I gotta admit. Are you starting to get this? I'm going to repeat this real quick because I need you to get this. I want you to make lots of money, and then you can buy my really expensive stuff because our software is very expensive. And why in the world would we do something like this when you can get free software? Like you go on TradingView, you could probably program these rules in there if you want. Well, because we have a lot of secret sauce that they don't. There's a really interesting tip that I can give you. Trade a bunch of strategies at the same time. That's why we built out this tool. And plus, can you use weird data? I'm going to talk about that in a minute. So stay tuned. This is going to actually blow you away that you can even improve on this, which is this is a really killer strategy already. But let's go ahead and look at some trades. You see right over here, this little red candlestick. Was it below the no-go zone? Yes. That means the next day you buy. And so certainly it went for a little gap down and then came back up. And then right over here, you see that's in the no-go zone. That means the next morning you sell on the open. Nice little profit. How big was the gain over there? Let me click on that one there. And so we have an 11% profit. That's no small potatoes, is it? And then it happened again. Strategy went below the no-go zone. And so you end up buying the next day on that one, and then selling after it goes in the no-go zone down here, right? So it started going up and fell apart. So then it ended up buying or selling into the gap up. And let's take one final look over here. And you can see that this candle right here, was it below the no-go zone in here? Yes, it certainly was. So the next day, what did it do? It bought. And then as soon as it got in the no-go zone over here, it sold the next day. You just rinse and repeat, rinse and repeat. The markets go like this, guys. Like when it starts making new highs, then sure, you can add some trend following. But for the most part, it's really killer to add trend following with mean reversion. And so isn't it interesting where most people put their stops, this thing's buying, and it's not chump change. So the average gain, let's look at some key metrics on here. I know that this might be overkill for you, so I want us to focus real quick and keep this simple on what really matters. And number one for most people is like, well, how much does it make? Come on, Dan. How much is it making? So about 58% compound annual growth rate. And max drawdown is pretty high, but about 47%. And this is another reason why you trade multiple strategies at once. That's Wall Street's only free lunch. And then you really start to smooth out the results. And let's keep going here. The other thing you want to see is profit factor. That's about 3. That's great. Anything over 2, that's great. And that's basically your gain to pain ratio. So 2 to 1 gain to pain, I'll take that any day of the week. And then this is 3. So that's really killer to see. Average position gain. Are you making money, or is your broker making money? You're making tiny little percentage points, because slippage, which is very important, that's going to be like your commission and slippage, where you get bad fills, you're not quite getting the opening price. You know, interactive brokers is like a minimum of $1. I really recommend them, by the way. I don't shill for them. I use them. And with most of our users, if you stick to the guns, you actually make the trades. Slippage is about 0.15% on average, so very, very tiny, because we're trading large cap stocks. We're not out there with these penny stocks. That is a crazy minefield, and I can't believe how many people are suggesting trading penny stocks on YouTube. Pretty weird. So I hope you take this knowledge and take action, man. Like, there's just so many people that just wait around and just kind of get their thumb up their butt and don't do anything. Most people, they'll go and buy some kind of a educational program, and then they don't even take the shrink wrap off. So I would love it if you do something like this. It doesn't have to be with us. Portfolio Boss already has this indicator built in. And then, like I said, almost any there's all this free trading software out there. That's another reason why markets, traditional indicators are mine dry, because there's millions and millions and millions of people have access to all these tools. So you got to be doing something different. So look in the mirror and ask yourself, am I doing something different, or is everyone talking about what I'm talking about? And if you're doing what everyone else is doing, I'm sorry, man, you're probably not going to make much money, as you are going to be with the majority. The minority makes all the money. I promised you I would tell you about this Nvidia strategy. It's really wacky. I'll show it to you real quick, and then I'll show you exactly. Oh, is it still in Nvidia? Because this one switches back and forth between Nvidia and the inverse Nasdaq 100. Well, hit start here, and we can take a look at it. This one has much better metrics. The backtest has showed it's compound annual growth rate 80% now. It was 78% the other day, but this thing just keeps hauling ass. And you can see me, if you ever visit me on Twitter, you can see that I'm just right all the time. It's because I test. It's like on April 7th, I said, hold your nose and buy, man. You have to do it. This is forced liquidation. It was just so obvious if you've been doing this for a while. But this one's mighty weird in that it uses weird data. And in fact, I'm going to give you the secrets behind what it's using. It's very, very simple. It's just, we're looking at global ETFs. There's like a weird ETF mispricing glitch. I reveal all about it in this free cheat sheet. You can go ahead in the comment section. It's the first pinned comment, and download this for free. Just put your email address in there, and I'll just send it to you. It's all automated, easy peasy. And you can become a part of my world where we just use stuff that's different. So always on this channel, everything is going to be proven. It's going to be backed up by backtest before I ever put a dime into it. And we make sure we're not overfitting to the past by 2 different methods, keeping 20% of the data, sometimes 25, and then an additional 6 months where we effectively set that puppy aside and then see how it performs. And just there's been so many backtests that I've made where I've been a billionaire many times over with backtests, but in the real world, I was just getting punched left and right. And then I found out, oh, you really need to confirm with all this out of sample testing. And luckily, it is pretty easy once you follow some basic cheat sheet methodologies. But this is a full trading strategy for the S&P 500. So go check it out. And I promised you, didn't I, that I would show you exactly how it's positioned. This thing is just blasting off. It's basically in trend following mode, although this doesn't look at price behavior at all. It's looking at mispricing, and that acts as a fingerprint of what hedge fund managers and global fund managers are doing with their money and what they're likely to do in the very near future. And then that's why this strategy is up 50%. I created this strategy in 2023, by the way. So it has survived the hardest environment of any trading strategy, the future. And so that's up about 50%, while the Nvidia itself is down about 3%. So that's definitely a tale of 2 different markets. Buy and hold sucks. It wasn't fun if you're doing buy and hold. This thing, even though it's Nvidia and this thing is expected to go to the moon, and we're going to see some huge changes in the economy with AI, and just how we live our lives is going to greatly affect us. I'm hoping for the better, but you still had a white knuckle ride handling that 44% drawdown. So I hope that this helps you out. I'll see you in the next video, and expect a lot more trading knowledge from me. So hit that subscribe button and leave a comment and what kind of trading strategy I should build next. What's this ticker symbol? Go ahead and leave that in the comments below, and I'll see you next time. Bye.